Welcome back to Wealth Signal. I'm Alex Carter, and today I'm going to show you exactly why I would put fresh money into a stock that has never once been cheap. I just put roughly $7,800 into a new position. And here's the thing. This stock is not cheap. It has never been cheap. Not in 2020, not in 2022, not today. Most investors look at that and walk away. I look at that and ask a different question. The question isn't, is this cheap? The right question is, does the business deserve to be expensive? Because there's a massive difference between a stock that's overpriced and a stock that's priced for excellence. Today, we're breaking down Axon Enterprise. We're going through the numbers, the DCF, the risks, everything. By the end of this video, you'll know exactly how to think about a premium stock and whether Axon earns that premium. Before we dive in, if you're serious about building real wealth through smarter investing decisions, hit that subscribe button right now. Every week we break down real companies with real numbers. No hype, just analysis. The company. Axon was founded 33 years ago with one goal: make the police pistol obsolete. That sounds radical, but it worked. They started with the Taser, a non-lethal weapon that avoided firearm classifications entirely. And that single move gave them something most companies never get: a trusted monopoly in a critical industry. But here's the real story. The Taser was never the destination. It was the Trojan horse. Once Axon got into police departments, into the hands of officers every single day, they used that relationship to sell something far more valuable: software. Body cameras, cloud storage, real-time command systems, AI-powered report writing. Today, software and services represent nearly 44% of Axon's total revenue, and that number is climbing every quarter. Think about what that means for the business. Hardware gets you in the door. Software keeps you there forever. And in Axon's case, forever is not an exaggeration. Once a police department sets up its secure data routing through Axon's Evidence.com platform, with government-level security clearances like FedRAMP, replacing them is not just difficult, it's legally and structurally impossible. That's what a real moat looks like. Now let's talk about the numbers that matter. Revenue is growing above 30%, and analysts expect that to continue for the next 3 fiscal years. 30% every single year. Free cash flow is expected to jump from roughly $19 million today to over $1 billion by fiscal 2028. That's not a typo. That's the business becoming dramatically more profitable as software scales faster than the cost of delivering it. Net revenue retention sits at 125%. What that means in plain English, existing customers are spending 25% more every year without Axon adding a single new client. That's the software flywheel in action. Drones and AI expansion. But Axon is not standing still. They're aggressively moving into 2 of the most important technology waves happening right now: drones and artificial intelligence. And the critical point is this: they're not chasing these trends. They're building on top of a business that already works. That's a completely different risk profile than a pure drone startup. On the AI side, police officers today spend roughly 50% of their work week, 2.5 full days, writing reports. Axon's Draft One system cuts that down to 20%. That gives back 1.5 full days of active service to every officer on the street, every week. You want to talk about real-world AI that solves a real problem? That's it. Not a chatbot, not a demo. A deployed product generating real revenue today. On the drone side, Axon acquired a company called Dedrone, a counter-drone network that tracks and neutralizes airspace threats. They just signed a $40 million enterprise contract with a major telecom provider. And here's where it gets interesting. Right now, U.S. local agencies are legally prohibited from taking down drones. Only the federal government can. But the World Cup is changing that. It's the first major regulatory waiver allowing local authorities to mitigate drone threats. If that pilot program leads to broader state and local approval, and analysts believe it will, Axon's total addressable market expands dramatically overnight. And there's one more piece that most investors completely miss: drone as first responder. Instead of sending a police car on a dangerous high-speed chase, you send a drone overhead. You track the vehicle. You eliminate the risk to the officer. You eliminate the risk to civilians. Axon is partnering with market leader Skydio to make this the new standard. This is not a future vision. This is already being piloted in cities across the country, and Axon is positioned at the center of it. If this analysis is helping you think differently about premium stocks, smash that like button. It genuinely helps this channel reach more serious investors. The risks and the DCF. Now, and this is important, I am not here to sell you on Axon. I'm here to show you how to think about it. And that means we have to look at the risks, because there are real ones. First, valuation. This is not a cheap stock by any traditional metric. Whether you look at last year's numbers or next year's projections, you are paying a significant premium. The moment growth slows, the moment net retention drops from 125% toward 100%, the moment international revenue stops compounding at triple digits, the multiple compresses, and that compression is painful. Second risk, stock-based compensation. Axon pays its people in stock, a lot of stock. GAAP operating margin was negative 0.8% in the most recent quarter because of this. Management targets keeping dilution under 2.5% annually, but for long-term shareholders, dilution is a real cost. It's not fake, it's not accounting noise, it eats into your returns over time. This is the number one concern I hear from every serious Axon bull, and they're right to flag it. Now let's talk about the DCF. 3 scenarios. Bull case, 35% probability, gives us roughly 19% upside from today's price. Base case, 50% probability, actually puts fair value about 12% below where the stock trades right now. Bear case, 15% probability, is painful. That's a 56% drawdown, not because the business fails, but because at today's price, you're already pricing in a lot of perfection. The probability-weighted outcome sits at around negative 7.7%. That puts a rational fair value near $414 per share. So why buy now? Because this is a starter position, not a full allocation. The thesis here isn't, I think this stock will be up 30% in the next 6 months. The thesis is, I believe this business will be worth significantly more in 3 to 5 years, and I want to own a piece of it before that happens. Averaging up isn't a mistake if the business keeps delivering. And so far, every single quarter, Axon has delivered. The bar is execution, and execution is what this team does. Here's how I think about premium companies in general. A premium stock deserves its premium for as long as the numbers justify it. You are not overpaying for Axon today if, 3 years from now, free cash flow has crossed $1 billion and the net retention is still above 120%. You are overpaying if that growth stalls. So the question you need to ask every single quarter is not, is the stock up? The question is, are the metrics still intact? So, let me bring this all together. Axon is a $36 billion company with a near monopoly in public safety technology. They have a software flywheel generating 125% net retention. They have a drone and AI expansion layer that's just beginning to unlock new markets. They have a DCF that says the stock is slightly above fair value today, but not dramatically so. The risk is real. The SBC is real. The valuation is a stretch. But the business quality is exceptional. And exceptional businesses, if you're patient, tend to reward patient shareholders. Investing isn't about finding the cheapest stock. It's about finding businesses that will be worth dramatically more in the future, and paying a fair price to own them today. Axon is not the cheapest option in the market. It never has been. But for a company building a monopoly in AI-powered public safety, with drones, hardware, and software locked in an ecosystem nobody can easily replace, the premium starts to make a lot of sense.
Do 3 things for me right now. First, smash that like button. It helps this analysis reach more serious investors. Second, subscribe and hit the bell so you never miss a breakdown like this one. Third, drop a comment below. Are you watching Axon? Have you already bought it? Let me know where you stand. I'm Alex Carter, and I'll see you in the next one.